And Andrew, this round trip that we've seen over the past few weeks really begs the question as to what is driving it. Is this just a sentiment-driven rally? Is it technical, or is there a fundamental case to be made for being back at these record highs?
Yeah, Romaine, here's the fundamental. I mean, you listed two great reasons, the geopolitics coming down and Fed. I'll list another one, which is in the first quarter, companies beat estimates significantly. And if all else was equal, then Wall Street should have raised their full year guidance by at least the amount that the first quarter numbers went up. But they didn't. They cut guidance dramatically. Companies withdrew their guidance, and it really left Wall Street to guess what was going to happen the rest of the year. And so they slashed numbers. And so I think that's another reason why the market's rallying, because the market is realizing that maybe the earnings numbers for this year have been cut too much. Tariffs won't be as negative. And if that's the case, Wall Street will be forced to re-raise their guidance because the hard data, the actual numbers so far have come in above estimates.
Well, that's what I'm curious about. We have seen a few strategists start to raise their targets, both for EPS for the year as well as the closing price target. But it's only gone up really just a smidge over the past couple of weeks. And the high end of that range, at least as tracked by Bloomberg, hasn't actually budged as well. Do you think you are going to see more folks on Wall Street accept, I guess, at least for what right now we know to be the reality, which is a strong corporate environment, a relatively stable economic environment to boot?
Yes, I do. It reminds me, Romaine, of COVID, which was in the spring of 2020. We had this COVID. Companies withdrew guidance. Wall Street dramatically cut earnings estimates, and then they were forced to, into the second half of the year, raise guidance. I think that's what's going to happen. Just to put a, exact on this, first quarter estimate earnings beat by about $4, but the full year number was brought down by $10. That's $14 delta, Romaine. And I think, and that's just this year. That's not for next year. And that's there's some bearish arguments, but that's the bullish point that I also think is going on here.
Which leads me into Bill Gross and a post on social media on X earlier today. And it was pretty funny. He said he sees a little bull market for stocks, a little bear market for bonds. The idea is that stocks are really AI dominated and are looking at, say, 1 to 2% economic growth despite tariffs and geopolitical unrest. But there's nothing dramatic either way for now. And that is what it kind of feels like on a day-to-day basis in the market. Andrew, what do you think about that? Little bull market, little bear market?
Well, I mean, the bull market for equities, and I'm an equity guy, is that right now the estimate for next year is $300. Well, what happens? I mean, Morgan Stanley just had a financial conference, and every CEO that got up talked about using AI, employing AI. I think this is a 2026 story. Why are they talking about it? Is because it's margin enhancing. And does that $300 reflect that? I don't think so. So that's the upside, is that the E, again, might be too low. Now, the problem we have is at 6,100, you're still looking at a pretty high multiple, and that's why I'm not, incredibly bullish when we're back at 6,100. But I think the fundamental story is turning out to be stronger than what many predicted.
So like a better bull earnings, but a little bear bull market, maybe something along those lines, in terms of what the stocks are actually doing versus what the numbers when they come out. What sectors in that environment do you like?
Well, you have to think about who's going to benefit. Well, technology. Why is I hear all the time U.S. exceptionalism is over. That's the argument for outside the U.S. I get that, but I think what's really going on here is that the very large, the Mag 7, they're spending a lot of money on CapEx rollout. And they're telling us, Alex, don't worry, this will all pay off down the road. And, we're saying, we'll see. Well, I wouldn't bet against these guys. But right now, their return on invested capital's come down a little bit. So I could see a scenario, Alex, where you get to the end of the year, the rest of the world has done better than the S&P. The 493 has done better than cap weight, and everyone said, "Oh, it's all over. U.S. exception is over." And guess what? All these companies that start to employ AI are going to, use these services, and you're going to see the S&P cap weight come roaring back next year.